Good day, viewers. I'm your financial accounting teacher. I will be taking financial accounting for Senior Secondary School 3, SS3. This particular subject is based on curriculum recommended by Nigeria Educational Research and Development Council, NERDC, under the Federal Ministry of Education. These are the things and the topic under the things for SS3. One, we have a company account and the regulation of Nigerian capital market. Under it, we have final account, we have regulation of the capital. Then the second thing is the introduction to data process, which we have topics under it as like data processing, application of computer in an accounting environment. The third thing is talking about the department and the branch account, which has a topic under it, which is the department account and the branch account. And we also have government accounting, which it has a topic under it as the public sector accounting. Having done that, we'll go to team 1, which is the company account and the regulation of Nigeria capital market. What under it, we are under this final account, we have what we call profit and loss appropriation account. Final account is not different from that of one we did, and that is that of a sole trader. You know, we talk about trading profit and loss account. It is one that is prepared for a sole trader, proprietor account. But here there is no difference. The only difference here is the profit and loss appropriation, and this final account is more comprehensive than that of the sole trader account. So under the final account, we have the profit and loss appropriation account. That is why it is different from that of a sole trader account. But the same application goes with that of this topic that we are making the discussion on. So this is the appropriation account. This is an extra section of a profit and loss account, which shows the way profit is distributed. It is used for the distribution of profit. And the only distinct of final account is you see shareholders which are involved and which are the people that contribute to the capital of the company. If you can see such items, you will know that this has to do with the final account. Now, what are the items of appropriation account? Under it, what are the things that you can find in the format of appropriation account? We have a general reserve, we have corporate tax, we have proposed dividend and interim dividend, we have a good, well written off, we have net profit, we have preliminary expenses. So we'll be taking it one after the other. So then we also have terminologies in the final account, which you will be discussing. We talk about the interim dividend. Interim dividend, this is the dividend declared before the end of the year. You know, the shareholders, the returns that shareholders are expecting from the capital they contribute to the company is the dividend at the end of the day. So that will be declared by the company at the annual general meeting. Then we also have final dividend. This is the dividend declared after the end of the year. Now, what is this dividend we are talking about? What is this dividend? Dividend is a proportion of the company's profit, which is distributed to the shareholder. And like I said the other time, that dividend is what you can call it a return to the shareholders after the capital has been contributed in form of shares to the company. So at the end of the year, annually, the shareholders are entitled to what we call dividend at the end of the day. So then we have reserves, and that is the work of a company that is registered. They must have reserves from their retained earnings, which is a net profit at the end of the day. So reserve, a firm will maintain separate reserve funds for different purposes instead of distributing the entire profit to the shareholder. And you know, as companies keep going, the only thing that cannot be a threat to the going concern of a company is the profit. And it is not expected of a company to distribute those profits. They must declare little, and the remaining will come to the reserves, because companies are involved in so many projects. So if they don't have project reserves, then they couldn't be able to fund some other projects. So that is why it is a amount that is separated to fund for different purposes instead of distributing it to the entire profit to the shareholder. Then we also have a preliminary expenses. Well, these are expenses expended in the formation of the company. The expenses that you incur in the course of incorporating a company or registering your company is what we call preliminary expenses. Now these are the format of appropriation account. We have debit side and the credit side, and don't forget the double entry principle also applies to this. And like I've always said, that the double entry principle is what guides the preparation of any account. So we have a ledger of appropriation account here, where most items that have been listed is included in a different side, which are the one in the debit side and the one in the credit side. We have general reserve, we have corporate tax, we have proposed dividend, we have an interim dividend, we have goodwill retain, and the net profit on the credit side. You know, any income that comes in for you has to be credited, while expenses has to be debited. So it's like you are distributing part of the profit into the general reserve, to the corporate tax, because a company is expected to pay a tax at the end of the year, which is annually, and that is under CITA, Corporate Company Income Tax Act. So proposed dividend to the shareholder must also be given here, must also be distributed from the profit. And likewise, we have goodwill, which has to be written off at the end of the day. So the remaining amount will be the balance. The balance from the profit, and which can also be called retained earnings at the end of the day. So that is appropriate. Then we have a comprehensive balance sheet. It is quite different from that of sole trader, but there are some items that is also included. But you can see here we have authorized capital, we have issued capital, we have reserves on the liability side. So it must be stated where the company source the funds, where they get the money that they use to start the business. And that is you can see here that 100 ordinary share of 2 naira each. And like I've also said, authorized share is quite different from issued shares. Issued share, authorized share is the one registered by the company saddled with responsibility to registered company, and it must be stated in the memorandum of association. But the issued capital is what is the capital that was issued out of the authorized capital, and that is the reason you see it has been stated there. Then it can be from the ordinary shareholder and the preference share. So you know we have different type of share. We have ordinary share and we have a preference share. So reserve also is there, revenue is also there. On the asset side, you can see those items that look alike, like that of a sole trader. And we have investment, which are quoted investment. Investment, when a company has investment in other company, then it is also the asset. So we can call it investment because it brings the sums to the company at the end of the day. Then we have intangible assets, which are classified under the goodwill. We have patents. We have patent rights, we have a copyright, and we have so many things like that. We have development costs. Then you can see that this is in practice, this is how to prepare a balance sheet for a company, real one. So all liability has to be classified to the group where they belong to. We have long-time liability, and we have current liability. Long-time are the liability that last for over 20, 50, 5, 10, ranging from 10 to 50 years. So while current liability are that of a short period of time, which has to be refunded maybe within 9 or a year. So and under it we classify it as the bank loans and the overdraft. We have trade creditor, proposed dividend, taxation payable, prepaid income, and accrued expenses. On the current asset, we also have stocks, the debtors. We have cash, we have bank we have bill receivable, accrued income, and prepaid expenses. Now, let's just now go to the illustration. Those things that we have discussed about, let's see how we go about it in preparing a financial account, comprehensive one. So here we have the illustration trial balance was extracted from the book of Song Limited as on 31st December 2000. Then these are the information. The trial balance is being drawn, and which we have the debit side and the credit side. So these are the information that has to do with, so these are the, and don't forget we have additional information at the end of the day, which I have why in the course of preparing the illustration, the account, then the first thing we need to prepare is the working, which is the data of additional information. And don't forget, about additional information is that anytime you are given information on additional information, it has to be treated twice. That means one in balance sheet and one in the income, in the trading profit and loss account. So, and these are the things that we are recruited to prepare the final account of Song Limited for the year ended. And don't forget, what will be included here is the profit and loss